Let's move on and let's welcome on board Anand Agarwal, the Group CEO at Sterlite Technologies, joining in on the show right now. Anand, hi, good morning. Good to have you on the show. Post-COVID, Anand, the importance of robust digital networks has clearly come to the fore. In fact, very critical areas like healthcare, education, crisis management are also now being viewed with networks at the center. How ready is India on the network and connectivity front, according to you?
Yeah, morning, Ayesha. Thanks for having me. You're absolutely right. So the entire framework post-COVID has changed. So digital is no longer, it's no longer a sector. It's become a platform spanning across various industries. It's not, digital should not and cannot be seen as an extension of telecom. It's a more wider infrastructural platform. And India, I would say, has done well over the last 6 months in terms of managing and keeping the basic connectivity going in terms of whether it is work from home, whether it's basic education. But for the kind of applications that you're speaking about, healthcare, agri, tech, rural connectivity, education, for that, there is still a whole lot needing to be done. And that ought to be the next phase of connectivity, where larger applications, cloud-based applications, and larger sectoral inclusion, education, healthcare, work from home, enterprise connectivity, all these areas start becoming extremely, extremely important.
Sure. So what is the opportunity then for Sterlite Technologies in particular to tap across digital networks, and how big could the 5G opportunity be for you?
So clearly, we are seeing that one is the traditional telecom carriers themselves investing in digital infrastructure. So the likes of whether it's Jio or Airtel and hopefully soon Vodafone Idea as well. There is large telco investments starting to happen right now in strengthening this infrastructure. We're seeing a good amount of investment coming in from the government also, especially on the rural broadband connectivity. We are seeing cloud investments also coming in terms of creating a full edge cloud and edge data center connectivity. And that is also fueled by a lot of private equity activity. So we believe that overall digital spend is going to grow significantly, especially on deeper penetration of fiber, coupled with at the edge 5G as well as Wi-Fi 6. The initial year, I think 2020 and 2021, a lot of focus will go into fiber connecting the towers, the homes, and the enterprises. 2022 onwards, the 5G based on small cells will be a large opportunity, which India will start spanning out, starting with cities and then moving on to other parts of the country as well.
Anand, you recently won a key order as well to provide end-to-end product services for Bharti Airtel. Can you give us more details on this order? What is going to be the possible contribution as well that you see to your profits and your margins in the long term?
Sure. So the Airtel order for us became a large validation of this end-to-end strategy which we have been pursuing for the last few years. We have this great portfolio of optical products where we have fiber, cables, and full connectivity suite, and which recently got strengthened with the acquisition that we did for Optotech in Europe as well. And then we have this entire network design, planning, deployment, and operations and management of the network. So this end-to-end capability, we are doing it in 10 circles for Airtel, and this is just a start of end-to-end engagement that we have currently with them. So this order is of the scale between 500 to 1,000 crores. Mostly would get done within the H2 of this year, and we believe this is just the start of a series of network augmentation opportunities that will come with Airtel as well as other customers around the globe.
All right. And can you share with us your overall global order book? What does it stand at? What have been some of your recent multi-year deals? And how close are you now to achieving the goal of doubling your revenues to 10,000 crores?
So in terms of order book, we have close to about more than 10,700. So it's between closer to 11,000 crores order book. We are seeing a good amount of engagement. I talked about India, the kind of investments which has started after 2019 being sort of a lower year. We are seeing a lot of activity coming in from Europe as well in terms of infrastructure spending going up really rapidly in countries like UK, France, Germany, Italy, etc. So we believe that the tailwinds are there. We believe that whatever we spoke about digital being more becoming wide-based and then moving into core infrastructure with funding and investments happening from a wide variety of people is starting to happen at a global level. And that clearly augurs well for our capabilities as well as our presence. The short-term issues of, this lockdowns and stuff which has happened in Europe again kind of tempers it a bit, but fundamentally we are very bullish on the macros of the entire digital infrastructure spending and our position there. And we are clearly bullish on the roadmap that we have set out for ourselves at it.
So one of the goals clearly is to reduce debt and bring the net debt to equity ratio down to about 0.5 times. Am I right, Anand?
Absolutely, yes. So we have three goals that we've set for ourselves: revenue goal, debt goal, as well as return on capital deployment.
Okay. Now, feel free to elaborate on those and also the kind of timelines you're looking at on those. I mean, when we look forward right now, I mean, are you first, deciding on parameters or targets for, let's say, the second half of the year, or are you looking further than that as you define these goals?
So for us, clearly the first and foremost part becomes having greater market share with our customers, addressing a larger part of their overall capital spend that they do. So the revenue becomes extremely important towards creating that scale. And for that, one good leading indicator is the order book, and that's what a great focus is for us. So our order book has, if I see over the last 1 year, in spite of the pandemic, has increased by about 32%. We were close to about 8,000 crores at this point of time, and we are already getting close to about 11,000 crores now. Order book and revenues becomes of extreme focus. And towards doing that, we are clearly augmenting our capabilities. We have done organic investments in increasing our capacities, both on the optical fiber and cable side. We have added capabilities. We did an acquisition in UK around this time last year on data center connectivity. We invested in a wireless software company in Israel earlier this year. And recently we have done some investments in acquisition of optical interconnect company as well. So to that extent, the first out of this 3-year period where we have set this goal to double the revenues and half the debt equity ratio, the first part of it is more focused on creating these capabilities and investments. So it would spur growth. It would create the kind of revenues that we are looking at. And as the cash flows start coming in, we have this clear plans as to how these the cash which comes from operations goes towards overall reduction, both on absolute debt as well as on having this healthier debt equity ratio. In the third parameter, which is the return on capital employed, we are already been operating at greater than 20%. So very, very fiscally responsible decisions in terms of making sure that all the capital that we deploy generates healthy returns. And we intend to make sure that any investments that we do, we maintain that healthy return on capital employed. So these are the three goals for the first next few quarters. There will be large focus on creating capabilities, more deeper engagement, increasing the order book profile. And as the cash starts coming in, you will see the debt equity ratio start becoming more and more towards the goal that we have set for ourselves to be at 0.5.
All right, Anand. Thanks so much for joining us this morning, and do have a good day going ahead.
Sure. Thank you.